What's the future forward from UBA? And that's coming from the Group Managing Director and CEO, Oliver Alaoba himself. He says, and I quote, "As we approach the last quarter of the year, which we are in right now," he says, "the group remains strategically positioned to sustain the strong performance, consolidating on first half 2023 results to deliver superior returns to our esteemed shareholders." That's what the CEO said in a statement that was released today to the market, and that's where UBA is reporting the numbers. That UBA 2023 first half earnings set the tone now for this conversation on the banking sector and the markets with my guest, Johnson Chukwu, who is a licensed dealer and the group CEO at Carry Asset Management. A good evening to you, and thanks for coming through on the show tonight. We appreciate it as always.
Good evening, boss, and thank you for having me.
Thank you. We appreciate it so much. Let's start with the UBA latest earnings. Read the tea leaves of those numbers for me.
Well, boss, those figures are quite impressive. Starting from the top line, you saw the top line grew by more than 160% to about 981 billion. And then you look at even the bottom line. The bottom line grew by more than 300%, from just 78 billion to from 79 billion to 78 billion. And if you look at the earnings per share, the earnings per share grew from 1 naira 98 kobo to 10 naira to more than 10 naira per share. So in terms of the performance, if you look at even the net interest income, because you look at where is the income coming from, the net interest income grew by more than 56%. We saw a net interest income that grew to 278 billion in the first half of the year. And if you look at other income heads, one of the major performances, the major drivers of this result is what they call valuation or fair value of derivatives, which came at a print of about 348 billion. And I think that came from futures and forwards, swaps, currency swaps and forwards that the bank entered into, which also shows you that the capacity of the balance sheet to intermediate beyond the local market. And I think those forwards and swaps may have been with the Central Bank of Nigeria and possibly with other financial entities. So you have a revenue and an earnings structure that is diverse, and beyond that, we also did not see any material increase in non-performing loans, and which was really a concern that with the deterioration in the economy, that we should begin to see an uptick in non-performing loans. So on the balance, I think this UBA's result is quite impressive.
But how do these results play into UBA Group as a Pan-African lender?
Well, it further establishes their position if you look at the balance sheet footing, if you look at the diversity of the earnings, and if you also look at the fact that the bank's earnings are not geographically limited. You have a situation where the bank had footprint in several African countries. And in terms of the diversity of the earnings, like I also said, if you talk of a gross earning of about 971 billion, and then you look at net interest income of just 278 billion. So it then means that the bank is not solely dependent on deposit-based or liability-based earnings. There is a strong earnings coming from fee-based and commissions. If you look at even trading, from FX trading or currency trading, or what they call, currency trading, you saw about 29 billion income from that. Like I did mention, we saw about 348 billion from fair value of derivatives. So looking at the entire structure of their earnings, like I said, we are talking about a bank that is relatively diversified in terms of earnings structure. So which means their footprints across Africa is beginning to bear fruits.
Okay, let's widen this conversation, Johnson, as far as what the central bank is asking the banks to do to save their FX revaluation bonanza for the rainy days. Do you agree with that directive?
Somehow, Bosin, I don't quite agree with the underlying assumption that may have informed that directive. And in the first place, remember the reason why you say that they should save their foreign exchange, the revaluation earnings, and not spend it on operating expense as well as not pay dividend from it, is that you expect that to reverse. So the reversal, the factor that could lead to a reversal of those earnings are too far stretched. One of which could be if a bank's balance sheet structure changes and the bank has negatively gapped their balance sheet in terms of foreign exchange assets and liabilities, which means that the bank now has more liabilities than assets. So in that case, you also expect that there will be further devaluation, so that the devaluation of the liabilities will now outstrip the devaluation of the assets, and therefore they're going to have a negative net foreign exchange devaluation income, which is a loss. The other thing that you could actually say is that you expect the banks to hold their current asset position, that is the current position on liabilities and current position in assets, and that you are going to see a revaluation of the local currency, so that the current valuation of those assets will have to come down, and the banks will have to lock in revaluation losses. So do you expect logically that we're going to see an immediate revaluation of the local currency? I think the answer is no. Do you expect any rational bank management to now change the structure of their balance sheet and now begin to hold more liabilities in foreign currencies than they are holding in assets? I think that's also to say that the answer to that is also no. And I don't think, of course, the central bank has the net open position, which is a limit of 10% of the shareholders' funds. So I don't think any bank will even breach that net open position. And should they even have a net open position, the net open position will be a positive net open position, not a negative net open position. So I don't see the likelihood that this revaluation gains that the banks have made will reverse in the coming months, as to now keep these earnings in reserve and to say, look, this is a cyclical earning that could reverse in the near future, and therefore do not dispense with it.
Well, good time for investors and market professionals like yourself. UBA is paying 50 kobo per share. That's good news. That's some money on the table for you, isn't it?
Yes, absolutely. I mean, we've seen banks coming out with strong earnings, strong mid-term dividend payment. We saw a Fidelity Bank that had never paid an interim dividend come up with a 25 kobo interim dividend. We're now seeing a UBA with a 50 kobo interim dividend, and we're expecting a lot more of these financial institutions to come up with interim dividend. The period has been quite very rewarding for the financial institutions, unlike some other sectors of the economy that suffered huge foreign exchange losses, and some of them ended up with marginal profits, or some of them even possible losses.
Okay, so we've dealt with some of the sweet news on the markets. But what do you make of the FTSE Russell Index that is looking to kick Nigeria out of the frontier basket into unclassified on September the 18th, next week, Monday? What would the ramifications be for the Nigerian market, by the way?
Well, I think, Boston, we all as Nigerians must recognize that these are some of the fallouts of our current financial quagmire or economic quagmire. Of course, many of us have said, and I remember in your program, I had said that, look, until we address the issue of FX liquidity and stability in the exchange rate, you're not going to see foreign portfolio investors come back. I also did mention that for us to achieve that, we must clear the areas of unmet demand by foreign portfolio investors who have sold their Naira assets and want to exit Naira positions. If that is not done, we don't expect to have foreign portfolio investors. So what FTSE did is to safeguard the integrity of their own platform and ensure that those who rely on them to make investments in frontier markets do not get into an economy where they get trapped. And that's why they're kicking Nigeria out of the frontier economies into an unclassified category. So in that case, no investor, no institutional investor will come and say, I relied on your report and I did invest in Nigeria and I got trapped. And we must deal with this fundamental issue. We cannot prepare over it. We have actually said, well, we have to look for funding sources to clear the arrears. That's the only way we can stabilize the exchange. That's the only way we can begin to attract investment into the economy. Until we do that, we are dealing with a cancerous problem that we're just massaging. We need to attack the problem from the root of it, and which means whatever it takes to clear those areas. Remember, in the last couple of weeks, the central bank, through the Nigerian National NNPC Limited, assessed about 3 billion from Afrexim to stabilize the exchange rate. And we've seen some level of stability just from 3 billion intervention. Assuming we had actually assessed about 10 billion, at the onset of the exchange rate harmonization, probably wouldn't be where we are today. And some of us have said we didn't prepare very well for the policy thrust we took. And key thing for me is that we must address that challenge of liquidity in the FX market and clear the areas of unmet demand.
Interesting speaking with you. We thank you for those deep insights to the markets as always. Do have a great evening. Thank you so much. Johnson Chukwu, licensed dealer and the group CEO at Carrier Asset Management. Thank you so much.